planning is optional. If you want, you can go. Tax management is mandatory, compulsory. You have to file your tax on time. The origin are more than 50% of the shareholding is with Indian person, Indian resident. We call it as domestic company. Any Indian company dividend exceeds 10 lakh, we are supposed to pay tax. A warm welcome to one and all. This is your ALsir here, lecturing Vidhyaashram First College, the Temple of Excellence. And now we are discussing the session 3, unit 1 of your corporate tax planning under the unit called Introduction. So under Introduction, we have almost covered all the topics in this unit. Now, in the previous session, we discussed about tax evasion, tax avoidance, as well as tax planning. Now, in today's session, we will discuss the remaining topics which are pending in unit 1. So, these are the topics we are going to discuss in today's session, and whatever we discuss today, all are your 5-mark topics. Now, tax management, difference, types of companies. These are the major topics which are going to come for 5 marks. In this, types of company, we have Indian as well as foreign company. Indian company also we call it as domestic company. These are the 2 types you are supposed to learn. Don't go like your company law, types of company, all kinds of company, statutory, all those things not required. For your examination, for your corporate tax planning, only 2 types of company which are domestic and foreign company. In this also, they will not ask you what is the maximum number of members, what is the maximum number of directors, all those things they will not ask you. Only for 5 marks, you are supposed to explain what is domestic and what is foreign company. Now, tax management as well as differences. What are the differences we are going to study? You will get to know while doing the topic. First one, tax management. So you know that what is corporate tax and as well as management also. Now, under corporate tax management refers to the compliance with the statutory provisions of law, while tax planning is a optional, tax management is mandatory. Now, what do you mean by tax planning and tax management? The difference I'll tell you. Tax planning is very simple. You know that we have deductions, we have exemptions, we have rebate, all those. What is the help of these 3? You can reduce your tax. That is called tax planning. What is management? Properly payment of tax on time. That is called tax management. Hope you are clear. What is tax planning? Tax planning, it is nothing but all the deduction, exemption and your rebates. If you claim that, your tax burden will reduce. That is always optional. If you want to reduce, you can claim. If you don't want to reduce, you can skip to claim. Hope you are clear. Yes, but management means what? Management means the government has given date like July 31st is your individual tax filing. September 30th is a company tax filing. Because of Corona, COVID and all, it is extended, but normal time is July 31st for individual tax filing like us, and September 30th is a company like Vidhyaashram, Infosys. For those things, they are supposed to file their income tax before 30th September. These are the dates are there. No? On date, if you file your income tax, then we call it as tax management. If you want to reduce your tax, that is called tax planning. Tax planning is optional. If you want, you can go. Tax management is mandatory, compulsory. You have to file your tax on time. Then it includes maintenance of accounts, filing of returns. See, what is management? As I told you, on time filing of your tax. Now, under this, what will come? Maintenance of accounts. You have to maintain your books properly. Filing of returns. If there are quarterly returns every 3 months, half year returns every 6 months, yearly return every 12 months, you have to do it properly. Payment of taxes, deduction, tax at source. If there are any deductions are there, if there are any TDS are there, tax deducted at source will come later. We have the topic, we'll discuss later what is TDS. Now, timely payment of advance tax, all comes under your tax management. Now, poor tax management may lead to levy of interest and penalty. Poor tax management means what? Just I'll give you an example. You have started a new company. In that company, you have appointed an accountant. Now, the accountant is just BCom or BBA pass. Now, he doesn't have any knowledge about the tax filing, your ITR forms, nothing. He doesn't have any idea. Then, what do we call it as? Poor tax management. If he is not expert, if he is not thorough with the filing dates and all, then we call it as poor tax management. Because of his mistake, what happens? You're supposed to pay interest. You're supposed to pay penalty. Now assume that every month 20th you're supposed to file your GST. Assume 20th you're supposed to file your GST returns. Now, if your accountant is not good at that, if your accountant not calculated your GST, if he has not filed your GST, then what happens? You are supposed to pay penalty for that. How much you are supposed to pay GST? If it is delay, you are supposed to pay interest on that. These are the things for poor tax management. Hope you are clear? Yes. In some cases, it may lead to heavy financial loss if proper compliance is not made. Example, if loss return is not filed in time, it will result in financial loss, which will not be allowed to be carried forward. What does it mean? Very simple. For example, again go back to the same example, that accountant, just BCom or graduation pass, he doesn't know anything about your filing. Then, but you have trust on that person. What happened? This year you incurred 20 lakh loss. What is your loss for this year? 20 lakh. Normally the accountant, what he is supposed to do, even though you are in loss, you have to file your income tax. You are not paying tax because you are in loss, but you have to show to the government that I am 20 lakh loss. I am under loss of 20 lakh. This is your major or this is your responsibility. Hope you are clear? Yes. In case you have not showed this loss, then what happens? Then next year you got 30 lakh profit. Next year you got 30 lakh profit. Then what happens? If you are not filed your income tax for last year, whatever 30 lakhs profit you got, you are supposed to pay tax 30%. How much it is? 9 lakh you are supposed to pay tax. Next year, what is your profit? 30 lakh. 30% tax. 30 lakh into 30%, how much you are supposed to pay tax now? 9 lakh. In case you have filed your income tax last year also, your accountant is good, assume that your accountant is good, even though it is loss, he showed to the income tax office, we are under loss. Then what advantage you will get? Very simple. You can carry this loss for next year. If you are already filed your income tax for last year, you can carry that loss to next year. What is the advantage? You are not supposed to pay tax on 30 lakh. 30 minus last year loss. Because income tax people know that last year you incurred 20 lakh loss because you showed them already. Then 30 minus 20, the balance is 10 lakh. On that 30%, you are supposed to pay only 3 lakh tax. See, because of showing this loss, instead of 9 lakh, you have to pay tax how much only? 3 lakh. These are the advantages. Now, allowed to be carried forward. If you showed your losses properly because of tax management, you can save all this. Because what is tax management? Systematically handling your tax, systematically on time payment, systematically on time filing, systematically on time showing of your loss as well as profit. All this we put together, call it as tax management. Very important for your 5 mark. Sometimes they will ask you, what is tax management? Explain tax evasion, tax avoidance for 10 marks. Clear? That's why you are supposed to remember all these points. So now we have tax planning and tax management. Already I explained you what is tax planning, what is tax management. Again, I'll repeat now in this. Tax planning is a wider term, includes tax management. In the tax planning, tax management also included, but tax management is a narrower and it is the first term towards tax planning. Now, wider means what? Tax planning, I told you already, if you go to any CA or chartered accountant or somebody, what they will do? They try to reduce your tax. That is called tax planning. What is tax management? On time payment. All comes under. And if they have given 30th September is your due date, you should file 30th September itself. If 31st July is your due date, you are supposed to file on 31st July itself, because narrow, you cannot make it wider. Whatever rules they have given, we should follow. But tax planning, there is a deduction of 50,000. If you want to take, you can take. If you don't want, you can skip. That is called, we call it as wider terms. Hope you are clear. I'll give you best example for wider as well as narrow. In your examination, you have a question paper. Yes. Now, there are 15 mark. They will give you 4 questions. How many questions they will give you? 15 mark, 4 questions. Now, what is the options here? You are supposed to write only 2. They will give you 4 questions, but you are supposed to write how many questions? Only 2. In this case, what happens? You have an option wider. You have an option wider. You can choose even first and fourth. You can choose first, second. You can choose third, fourth. It is left to you. You can choose any 2 out of 4. That is called tax planning. It is a wider term. Now, assume that your 15 mark, in the question paper, they have given only 2 questions. It is not 4. They have given how much? Only 2. How much you are supposed to write? 2. Do you have any options here? In the question paper, there are 2 questions. In the heading, they have mentioned all 2 are compulsory. Then what happens? This is called narrow. What is narrow? Restricted. You cannot see here and there. You have to go with this 2 only. Hope you are clear. This is called planning as well as management. Now, tax planning emphasizes on minimization of tax. What is planning? It reduces tax. But management emphasizes the compliance of legal formalities. In tax management, it will not reduce, it will not increase, but it follow the law. It follow the legal proceedings. Now, next one, every person may not require tax planning. Every person not require tax planning, but tax management is essential for all. Hope you are clear. Yes. Tax planning helps in decision making, but tax management helps in complying with the conditions of effective decision making. Both are almost same only. So compliances means always remember the conditions, the rules and regulation, restrictions, all comes under your tax management compliances. Hope you are clear. Good. So continuation, tax planning helps to claim various benefit. Wherever I do underline, those words only you are supposed to remember. Rest of the things are only sentence. Now, Tax management helps in complying the conditions of claiming tax. Then, tax planning involves comparison of various alternatives before selecting best one. But management involves maintenance of accounts, prescribed form, filing of returns, payment of tax, everything including tax management. Now, tax planning looks future benefit. Tax management related to past, present and future. Tax planning only for future, but management is past, present, future. Now, how many points are there? 1, 2, 3, 4, 5, 6, 7. There are 7 points are there. Try to remember at least 5 points. You can select which are easy. Remember only 5 points each. That is more than sufficient for your examination. Domestic company as well as foreign company. Now, what is domestic company? Domestic means we call it as Indian company. The origin or more than 50% of the shareholding is with Indian person, Indian resident. We call it as domestic company. Now, domestic company means Indian company or any other company which respect of its income liable to tax under the Income Tax Act has made the prescribed arrangement for the declaration, payment within India of the dividend, including dividend on preference shares payable out of such income. Now, all Indian company is treated as domestic. Then, foreign company makes prescribed arrangement for payment of dividend in India, it shall be treated as domestic. If there are foreign companies are there, but dividend are issued in India itself, then those company also considered as domestic company only. Hope you are clear. Whatever definition I am given, please use these definitions only. Don't go with Companies Act. As per Companies Act, you will get different definition like number of members, number of unlimited. There must be 200 members are there. All those things for your corporate tax planning not required. Hope you are clear. Yes. Foreign company, there are 3 points are there. Company which not a domestic company. First point. Second, foreign company may be treated as domestic company if such company makes prescribed arrangement in India as per Rule 27. Second point. Third, what is Rule 27? Prescribed arrangement of declaration and payment of dividend. If the dividend are issued in India, then that company will be called as domestic company. Clear? Yes. This much only sufficient for your examination purpose. So the share registered of the company for all shareholders shall be regularly maintained at its principal place. Like if foreign companies are there, the share must be maintained by where? Abroad only. If it is an Indian company, it should be maintained in India. Then, so similarly, all these points are there. Not much important. Remember, for domestic company, 3 points. For foreign company, there are total 6 points are there. Try to remember any 3 points for foreign company. So, that is all about your domestic as well as foreign company. The last part we call it as dividend tax. With this, we complete your theory topic. So, from the next session, we can go for your practical thing. So, practical in the sense, we go with completely problems. Now, we'll complete with your theory with this particular topic called dividend tax. What is your dividend tax? We also call it as DDT, dividend distribution tax. What is DDT? Dividend distribution tax. Right now, the DDT is not there, but in your syllabus, you are supposed to follow this. From 2021, they stopped DDT, dividend distribution tax. Now, but your examination, you have to follow this. If you check in your recent textbook and all, you will not find this DDT. What is DDT? DDT, it is nothing but dividend distribution tax. Normally, dividends are taxable or exempted? Yes, normally dividends are exempted. Up to what limit? Up to 10 lakh. It is exempted. Any Indian company dividend exceeds 10 lakh. Remember, any Indian company dividend exceeds 10 lakh, we are supposed to pay tax. Up to 10 lakh, all the Indian company dividends are exempted. Foreign company, completely taxable. Like dividend from the company in London, taxable. Dividend from company in Pakistan, 10,000, taxable. Dividend from the company from Sri Lanka, completely taxable. Hope you are clear. Dividend of 9 lakh rupees from India, Indian company, exempted. Dividend of rupees 10 lakh from Indian company, exempted. Dividend of 11 lakh from Indian company, the extra 1 lakh is there, no, that is taxable. Hope you are clear. Yes. Now, this much only you are supposed to remember for examination. In the notes, I'll give you what is dividend tax, meaning, definition, points. Now, what is the present condition now? What about this dividend tax? That is not there for your examination, just for your information. At present, there is no DDT, there is no tax at all, and at present, there is no 10 lakh slab also. At present, what? Up to 5,000. Exempted, above 5,000, you are supposed to pay TDS, tax deducted at source. What is the limit at present? Up to 5,000, no tax. Above 5,000, there is a TDS, tax deducted at source. What is the percentage? It is 10%. Because of COVID, they made 7.5. Again, from now, it is 10% only. Hope you are clear. These are only your additional information. For examination purpose, what is required, I'll give you in the notes. Now, I'll go back to all your previous slides. Please take screenshot. So, these are your agenda, your tax management, difference between tax planning and tax management, difference between planning and management, domestic company, foreign company, your dividend tax. So hope you understood that today's session, it is all theory topic only. It must be boring, but from next session, I don't go with theory. Don't worry. We'll go with completely problems. Now, your homework for the day, very simple. Last slide, I explained you dividend tax. In that, DDT. What is the abbreviation of DDT? That is only your homework. You are supposed to tell me in the comment box. Thank you.